Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak podcast, available every morning on Apple, Spotify or wherever you listen. It's Tuesday the 12th of March in London. I'm Caroline Hepker.
And I'm Stephen Carroll. Coming up today, Bloomberg learns that Rupert Murdoch's News Corp is eyeing a joint bid for the Telegraph with the owner of the Daily Mail.
JP Morgan CEO Jamie Dimon warns the risk of a US recession is not off the table.
Plus, building political capital. The former Credit Suisse CEO Tidjane Thiam says he wants to run for president of Ivory Coast.
Let's start with a roundup of our top stories.
Rupert Murdoch's News Corp is eyeing a joint bid for the Telegraph newspaper. Bloomberg has learned that the firm has held talks with the Daily Mail owners about a combined offer alongside UAE-backed investment fund RedBird IMI. Our reporter Tiwa Adebayo has the details.
The fate of one of the UK's most famous newspapers has been in question for months. Now a new joint ownership proposal is gaining momentum given concerns over foreign state ownership of a UK news organisation. According to people familiar with the matter, Rupert Murdoch is teaming up with Jonathan Harmsworth, controller of the Daily Mail and General Trust, to form a joint structure. The plans would still include UAE-backed RedBird IMI, but would allocate the vehicle a smaller stake, which could ease the concerns of British politicians who raised doubts about foreign control of the outlet. But it's far from a done deal. Hedge fund manager Paul Marshall could be excluded from the joint proposition. The bidders declined to comment. In London, Tiwa Adebayo, Bloomberg Radio.
Jamie Dimon says the Fed should wait before cutting interest rates, even if it risks a recession. The JP Morgan CEO put the odds of a US soft landing at 40%, saying he's less optimistic than global markets. Ariel Investments founder John Rogers is on the more hopeful side.
I think Jay Powell and the Fed have done an excellent job getting back on track. Once they realized that inflation wasn't transitory and they had to get serious about it, I think they're doing all the right things, and I have a lot of confidence that a year from now rates will be significantly higher. We haven't gone into a recession. Yeah. We've really been able to balance everything in a very, very effective way.
Dimon is more wary of the data than John Rogers that you just heard there. He says that economic indicators have been distorted by COVID-19 and he takes them with a grain of salt. Meanwhile, a key US inflation print is due out later today. Bloomberg Economics expects headline CPI inflation for February to accelerate by 0.4%. That's 3.1% year on year.
The European Central Bank is leaning against any immediate change in the amount of money lenders need to park with it interest-free. Bloomberg understands that a push to increase the so-called minimum reserve requirement above its current level has failed to gain traction. Lenders currently need to hold 1% of certain liabilities, mostly customer deposits, at the ECB. In July of last year, policymakers decided to stop paying interest on those holdings.
Russia is beginning to gain the advantage in Ukraine, according to America's top intelligence officials. In the third year of the invasion, Ukraine's troops are struggling to overcome a shortage of ammunition and personnel amid a stalled $61 billion aid package from the United States. Speaking to the Senate Intelligence Committee, the CIA director, William Burns, set out what he expects to happen if Ukraine is not supplied with more military assistance.
Ukraine is likely to lose ground, and probably significant ground, in 2024. In the Battle of Avdiivka, which forced a rushed withdrawal of Ukrainian forces just a couple of days before I was in Kyiv on this last visit. The consequences of that. One senior Ukrainian partner described what happened to me. He said that, our men fought as long and as hard as they could. We ran out of ammunition and the Russians just kept coming.
William Burns speaking. He added that the Ukrainians are not running out of courage and tenacity. They're running out of ammunition. The comments come as President Zelensky said that his troops had blocked Moscow's latest offensive and that they are stabilising the front line. That is despite reports of Russian progress in the east of the country.
The former Credit Suisse CEO Tidjane Thiam says he's planning a presidential bid in Ivory Coast. The 61-year-old former banker left the country after a coup in 1999 and went on to become the first black executive to lead a European bank. He's calling for a greater focus on the pension fund industry in Ivory Coast to encourage more savings. Now, in a moment, we'll get more on the future of the Telegraph newspaper here in the UK and dig into the detail of Jamie Dimon's comments about the US economy ahead of today's CPI print. But first, what can magazine covers tell us about the stock market? This is a great piece written by one of our colleagues that caught my eye this morning. So there's been a series of magazine covers talking about the record highs in stocks. So we had Barron's at the weekend with their headline Bet on the Bull. The Economist had one recently as well with a bull on its cover too, asking how high markets can go. This comes with what's known as the magazine cover curse. Now, this is a contrary indicator created by the analyst Paul McRae Montgomery. It's historically been considered a signal that an investing trend is reaching an end. The idea being is that if magazine editors have spotted it,
finally
you're
picked
too
up
late.
on it. Yes, it's over. Look, I still think, I mean, the question is justified, yes, but maybe the magazines are getting to it pretty late. I mean, Europe has seen such a strong start to the year, but even a lot of the investors that we've spoken to are still optimistic about kind of European stocks. But yeah, it's a good piece on the terminal this morning.
Now to more on the future of the Telegraph newspaper. Bloomberg has learned that News Corp and the owners of the Daily Mail have held talks about a potential takeover of the title with the UAE-backed investment fund RedBird IMI. This as some MPs have raised concerns about foreign control of the outlet, and several investigations have stalled a planned takeover. Our UK politics reporter James Wilcock joins us with the details this morning. James, first of all, just talk us through who is this new consortium and what do we know about their potential bid?
Well, there are a lot of players here, Stephen, and it's worth saying this is all potential. I mean, Bloomberg has got the exclusive that this is all in talks, but until, the ink is dry, I wouldn't say that this is like an agreed consortium. So the Telegraph has been up for sale for a while now, and there are a lot of interested players. You have RedBird IMI, who we mentioned just earlier, which is this joint venture owned by former CNN's Jeff Zucker and crucially funded, but not necessarily editorially controlled. This is a point of debate by the UAE's Sheikh Mansour, who also owns Premier League football club Man City. You then got the Daily Mail General Trust. Big titles like Daily Mail, Metro, New Scientist, hedge fund owner Paul Marshall, owner of Marshall Weiss, and also GB News, crucially, and also Rupert Murdoch's News Corp, which almost goes without introduction. Now, all of these groups have been lobbying and jockeying for positions here, and we have now ended up kind of potentially with a sort of joint offer starting to come together. It appears to be what Bloomberg are learning overnight. This is our kind of exclusive reporting.
Yeah, okay. What is the state, though, of the current offer then from the Telegraph Media Group?
I think it would be polite to use the word dead in the water, Caroline. I mean, so how it got to this sort of state is RedBird IMI put in this offer for the Telegraph. The Telegraph was famously a organ of Conservative ministers, party MPs, Conservative thought leaders all round, and they have complained vociferously. William Hague, the former shadow leader of the opposition, big figure on the Tory right, has written to the Conservative leaders, Rishi Sunak, Oliver Dowd, and Lucy Fraser, the Culture Secretary, saying, you can't let this stand. This would be a blow to the country, and even a national security risk, is the words that are being used. And so we had a review by Ofcom that was delivered to the Culture Secretary Lucy Fraser on Monday, and we haven't yet heard her response to that review, but certainly it seems to be that this offer from RedBird has been tied up in red tape, and Bloomberg is moving the story on to say, well, it seems like the consortium that is forming might be looking to try and dilute RedBird's stake as a way of getting a deal across the line.
Remind us some of the background to this, James. Why have politicians gotten so involved in the future of the Telegraph?
Well, I think it's worth saying, Stephen, that here in the UK, we have a growth problem, and we are trying to encourage more foreign direct investment. And the RedBird plan, as from Zucker, is to take the Telegraph and try and turn it into an American news organisation that applies to America. So we are getting FDI to build into a new business that would then hopefully push it out. That is the bullish case here, ignoring any national security concerns. And yet also, this is an organ of the media, a keystone of the UK paper establishment, and Conservative MPs see it as the of paper of record and as a national security issue. So this sort of debate is not just about the Telegraph. It is about, in this quest for foreign direct investment, what will Britain put on the market and how will it allure in foreign investors? And that tension at the heart of the debate is this a Conservative Party issue, or is this a broader issue about Britain's place in the world and how it is open to investment?
Yeah, absolutely. But there's also, though, the other element, yes, national security, but it's national security around democracy and the freedom of speech, which is a kind of pillar of the UK, and how much influence it might be under or not. And so, therefore, you come to this idea that is there going to be a change of law potentially from Rishi Sunak's Conservatives?
Yes, and one has been mooted. There's been an amendment suggesting current legislation that Rishi Sunak will have to take a view on in coming days, which would say the UK government could veto a media organisation. But I would pose the question, Caroline, if the Telegraph, why not Manchester City, a multi-billion-dollar football club that Sheikh Mansour already owns? Why not the multiple other ventures, not media-related, that RedBird already owns? Why this specific organisation? And this is where it is interesting to note that Labour Shadow Culture Secretary Thangam Debonair came out over the weekend to say they would be potentially concerned about this issue, but then the Labour's leader office slapped her down because they are also trying to say they are open to foreign investment, open to business. So although we could just be say this is just about the Telegraph and the Spectator, actually there are a lot of interweaving insecurities and threads about how the UK takes a place on the global investing world.
James Wilcock, our UK politics reporter, thank you very much for joining us.
Now, let's get more then on the comments also from Jamie Dimon that he wouldn't take the prospect of a recession in the US off the table and that the Federal Reserve should wait before it cuts interest rates. That's ahead, of course, of today's US CPI data. Our economy and government editor, Jill Deeses, is with us once again to discuss this. Jill, good morning. How much of an outlier is Jamie Dimon then with these comments on the US economy?
Well, Caroline, I think he actually sort of tried to spell it out. He was saying that, he thinks the chance of a soft landing in the next year or two is about half of the prevailing view of maybe a 70 or 80% chance. So I think significantly more pessimistic than maybe the broad consensus is. It's really interesting to hear Jamie Dimon say this, I think, mostly because of, those expectations for a soft landing have actually been building, at least in the last few weeks, especially after we got that fairly favorable labor data last Friday, telling us that there was a bit of an uptick in the unemployment rate. We saw some other wage numbers that looked at least encouraging for sort of a gradual cooling off in the market right now. So, running against the grain a little bit there by highlighting these comments here from Jamie Dimon.
What are then the risk factors that we should be considering in light of Jamie Dimon's comments to this, as you say, prevailing idea now that the US is heading for a soft landing?
Well, Stephen, I think that, it's similar to, how we've been kind of gauging a lot of these economic indicators over the last, year and a half or so, right? Is this idea of, what is, the Fed doing to sort of bring down inflation? How effective is that actually? And then what does the transmission process for monetary policy actually look like here for the Fed? I mean, we go toward this inflation data that we're expecting for February in just a few hours from now. How hot will that be? I think, the January reading was quite a bit of a surprise to the upside there. And there's, a lot of concern about whether the Fed, whether the Fed has ultimately done enough to address some of these concerns around inflation, but then also, where exactly they come in with this, strategy to eventually cut rates, hold them, where they are for now. I think it's been, really difficult to kind of tell just because over the past year and a half or so, the economy has continued to surprise to the upside. We've continued to see month after month after month of data, showing a stronger than expected, consumer in America. We've seen, stronger than expected resilience in the labor market. So it's been, kind of created this really interesting issue where, it's kind of hard to tell when exactly, this downturn is ultimately, maybe going to gather pace if it does.
Yeah, absolutely. Well, what more will we learn then from today's CPI print, the inflation data? We're expecting a slight slowdown in the core number. What else are you going to be watching out for?
Yeah, I think there's a few things to really look for in this data, Caroline. I mean, yes, I think that cooling off in that core number ultimately likely driven by falling prices for some goods. Maybe, new and used cars, I think, is what Bloomberg Economics is looking at as the primary driver there. But the other thing to look for, and this might be a little bit technical, but I think sort of speaks to concerns over the stickiness of housing inflation in the U.S. right now, is this component of the index called owner's equivalent rent that we saw a really unusual spike in January that ultimately resulted in the Bureau of Labor Statistics in the U.S. Saying that there were some changes in how some data sources were weighted, and there's been a lot of concern about whether that sort of speaks to stickier than expected housing inflation. I would be looking for any sort of clarity that we get on that front for at least some clarification over the usefulness of that component in this index.
Yeah, and of course all of that ahead of the Federal Reserve meeting on the 20th as well. Jill Deesis, our economy and government editor, thank you very much for bringing us up to date today. Worth saying that date is out at 12:30 UK time today. Don't be caught out by the time change in the US if you're usually used to getting it at 1:30 p.m. This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.